morning, everybody. So we are live for this week. I was able to get some time. I wasn't actually gonna be able to do this live session. Let me see. Can I do this live session? Yes, sir. Okay. All right, cool. So thank you guys for joining again this week. Hopefully you guys were able to catch that bullish momentum from this week. So as you know, we're dollar cost averaging into buy positions because the U.S. dollar is showing signs of weakness fundamentally. So we are trying to see if we can get better entries while dollar cost averaging using small position sizes. It's not a conventional way to trade, but I guess it's beginner's luck, if anything, because they usually advise people not to trade like this. So we're gonna get started at 9 o'clock with entries, but I just wanted to go through some news so I could really break down my analysis for the pairs. All right, so we're looking at, for today's news, we have industrial production in 30 minutes. So that's going to be at like 9:15. So that's the most important thing to watch out for. So I guess we'll look at what this has to say. All right, so industrial production measures the change in the total inflation adjusted value of output produced by manufacturers, mines, and utilities. A higher than expected reading should be taken as positive or bullish for the USD, while lower than expected reading should be taken as negative bearish for the USD. So at 9:15, we'll keep in mind that news came out, and we'll see how the market reacts. I do want to stick to the weekly time frame, but I might move down to the daily just to see how prices are opening up for today. Or, well, it's already open, but reacting when the news hits. So let's see. Previous -1%, forecast 0.5%. So we'll see what comes out for today. All right. So just to run through the other news, I'm not going to worry about anything after 4 o'clock pretty much, but there's a lot of news coming out around, what is this, 5:30? No, 4:30. So 4:30 tonight. We wouldn't be taking any entries anyways, but just know that there's a lot of news coming out tonight. Other than that, Michigan consumer expectations, Michigan's consumer sentiment, U.S. Baker Hughes oil rig count, U.S. Baker Hughes total rig count. That's all coming out between 10 and 1 p.m. for today. I want to look at the total. All right, so it's just a chart. Not much to read about this here. So, all right, cool. That's pretty much the news for today. Let's look at the news for next Friday. So pretty much we have durable goods, PMI, services PMI. Okay, so we'll look at the S&P Global Composite PMI, durable goods, month over month, and we'll ignore the rest of it now. So I don't know if you guys saw that. So durable goods, PMI, those are what we're looking at right now. And then we're going to read about durable goods. Durable goods orders measures the change in the total value of new orders for long-lasting manufactured goods, including transportation items. A higher than expected reading should be taken as bullish for the USD, while lower than expected reading should be taken as bearish for the USD. So February forecast was 4%, actual was lower. Before that, forecast was 2.5. Actual was higher. So we'll see. Previous 5.1. Actual 4.5. Forecast was 4.0. So we'll see what they got for us next week. Forecast is 0.9. So, all right, we'll be looking for that news when it comes out. And then S&P Global Composite. It's just a chart. So forecast 50.2, actual 50.1. And let's look at services PMI. The service PMI release is published monthly by Market Economics. The data are based on surveys of over 400 executives in private sector service companies. Surveys cover transport and communication, financial intermediaries, business and personal services, computing and IT, hotels and restaurants. Index level of 50 denotes no change since the previous month, while a level above 50 signals an improvement. Below 50 indicates a deterioration. Reading is stronger. That stronger reading is bullish for the USD, while weaker reading is negative. So, okay, last month we had a positive reading. So we'll see what happens next week. And then, or for this month, I should say rather, than manufacturing PMI. Okay, so forecast was higher than the actual, which I'm assuming is bearish for the USD. Manufacturing PMI measures the activity level of purchasing managers in the manufacturing sector. Reading above 50 indicates expansion, below 50 indicates contraction. Okay. So that's what we have for news. Let's read some articles. All right, so SPX 500 shows resiliency amid rising yields, written by Russell Shore. It was a week ago. I think we read this already. Yeah, we definitely read this already. Okay. Let's look at USD CAD. USD CAD appreciates. Oh, this was a week ago too. Huh. I wonder if they have anything current. I guess they're just refreshing the old articles. Okay, here we go. This looks like it's more current. All right, 4 days ago, US dollar pulls back as yields fall off of SVB failure. There we go. All right, so Fed takes step to limit contagion from SVB failure. Following the SVB failure last week, the Federal Reserve implemented an emergency lending facility on Sunday to prevent banks from conducting fire sales of financial instruments to meet deposit outflows and limit contagion to other banks. This rapid action by the Fed has caused U.S. stock market futures to look positive, making a 50 basis point rate hike at the March FOMC meeting unlikely. U.S. Treasury yields have fallen, particularly at the front end. This has caused the U.S. dollar to weaken and other major currencies to rise. All right, so, that's supporting our bias. U.S. dollar 10-year yield real rate correlation. The real rate candles for last week shows a dragonfly doji. Market hawks pushed the yields up to a high for the week before losing control to the doves. The doves then pushed yields back down to just below the week's open. Okay. This movement was mirrored by FXEM's US dollar index, blue arrow. It will be interesting to see if there's downside to follow through this week. It seems that a 50 basis points is off the table for March, but the question is whether the Fed goes ahead with 25 basis points. They may pause given the danger of banking contagion given the SVB failures. Regulators have already closed the New York Bank's Signature Bank and said that depositors would be made whole. U.S. dollar correlation coefficient with the real rate is 66%. As long as yields decline and markets reassess the Fed's action for March, the dollar is likely to be influenced to a large degree. All right, so that supports my bias. That makes sense to me. Let's look at crypto. Okay. Bitcoin rallies on banking crisis as shorts forced to close. Bitcoin responds positively to banking crisis. Bitcoin jumped almost 9% yesterday and 7% on Sunday. This is in response to the confidence crisis across the U.S. banking sector following the SVB failure. Cryptocurrency is also sensitive to front end of the yield curve, repricing yields downwards. Risk assets, including cryptocurrencies, were under pressure last week as the market worried that the Fed would hike by 50 basis points. This has now dissipated with the banking sector crisis. As such, risk assets are now being potentially supported. Moreover, as prices plunged last week, short positions were initiated. These are being closed as the market discounts potential Fed policy. According to data firm CoinGlass, close to 200 million in shorts were closed or liquidated over the last 2 days. That comes from Barron's. So technical analysis, BTC/USD daily chart is trading in its bullish channel between the upper blue and red bands. The longer it stays in this area, the greater the likelihood of further price appreciation. However, if it slips back down into neutral area between the blue bands, momentum will be waning. The hourly chart is already showing signs of slowing momentum. Its stochastic has crossed down and has slipped under 80. A retaking of the upper quintile will suggest that an underlying bullish momentum is present. However, if the stochastic moves towards 20, the bullishness will be dispersing. Okay, so he's essentially saying that we are at the top of the channel right now, looking for possibly a pullback. If we get extreme bearishness, it's possible that the bullishness might be dissipating. Okay, and then let's look at commodities. Gold short-term analysis for today. We're in less than a minute ago, or updated less than a minute ago. Gold's daily candlesticks are trading in their bullish channel between the upper blue and red bands. The red Bollinger Bands have expanded due to an increase in volatility. The longer the precious metal remains in this channel, the greater the likelihood of further price appreciation. This hourly chart has charted an ascending triangle pattern, blue dashed lines. So this, the hourly, which has higher lows. The upper boundary of the pattern overlaps with the R1 pivot, which is acting as resistance. The hourly momentum-based stochastic is over 80, which suggests that an underlying momentum is present. If the stochastic can maintain current levels, the momentum will be price supportive with the R1 pivot looking vulnerable. However, if the stochastic drops below 80, the upside momentum will be considered to be waning. Gold has benefited from the market turmoil that has gripped the banking sector over the last week. As uncertainty dominated cap take on the 22nd of March, if it comes in more dovish than previous, it will likely provide a tailwind for gold. All right, so I don't like their economic calendar though. Okay, so that's pretty much it for that. Let's go to the charts. All right, just give me 1 second. I'm getting my charts all set up. All right, 1 minute. We'll go through the charts. Just trying to update them real quick. All right, so it's 9 o'clock, guys. Taking entries. So I'm looking at AU. Fundamentally, there's weakness on AU. So I could possibly expect lower pricing. But for now, we're dollar cost averaging into this position with the buy position, looking for higher prices. So we'll see what happens if we fall down or if we move up. All right, so AUD Swiss franc still have fundamental reasons to believe that AUD could be weak, even though we're looking to short the dollar. So this is a buy setup potentially, but for now we don't have any indications to show us that price is, ready to, change sentiment. So GBP USD actually is GBPs are fundamentally strong right now. So we wanted to see if we could get continuation off of this little bullish push. If you wanted to, you could take profit at the highs, but I'm holding these for long term. So I was already in from last week, and we are looking at, nice bullish push for this week. Looking for the continuation higher. GBP Swiss franc. So Same thing as GBP USD. Fundamentally, we are strong. So we want to see if we'll get higher pricing. And yeah, okay. NZD USD. It's looking strong based on the charts. We got this engulfing. So it'll be interesting to see if we pull back and look for higher pricing. But fundamentally, I have reasons to believe that the NZDs could be weak still, similar to the AUDs. And then NZD Swiss franc, same thing. Fundamentally, we could look for lower pricing, but essentially, this is what I need to draw. Hold on 1 second. Okay. So yeah, we could potentially see lower pricing to then look for the buy up. So just to review, taking entries, I would say no trade on AU, fundamentally, no trade on A Swiss, fundamentally. GBP USD has a pretty nice setup for the buy. GBP Swiss franc, it's not so clean, but if we break high and pull back, it'll be a nice setup. So we'll watch for that. On GBP Swiss franc, fundamentally, we have reasons to buy the Great British Pound. NZD USD showing signs of strength, so that would be a potential trade, even though fundamentally it is weak. So we just want to watch areas like here as well as here to see if price reacts favorably or negative or unfavorably at those areas. And then NZD Swiss franc, similar to GBP Swiss franc, a lot of great movement this past week, but ultimately we still haven't cleared our highs. So we'd be waiting for a break and a retest before continuing up. So I hope that makes sense. If everybody has taken their entries, I'll continue on with the rest of the analysis. I might have to get off early, 9:30 today, or possibly a little bit later than that. So that's why I started a little bit earlier. I do have something to take care of. So please be patient with me because I'm still working on the schedule. But just know every week, 9 o'clock, we are taking entries as long as I can help it. What did I want to talk about? The prices that we're looking for. But for now, we're just watching price pretty much trade in a range. And we're trying to see how it's going to react when it gets to certain prices. Okay, so let me do my fundamental analysis. I'm going to get rid of, no, actually, I'm going to keep these, but we won't go over it. All right, so, okay, VIX moving up. That's nice to see. So we have a lot of volatility entering the market now. So volatility is entering the market. Since we cleared these highs, and it looks like we're possibly continuing to push up. So possibly we'll get some nice reactions in the market today or next week, I should say, rather. Okay. AUD hasn't broken the high. Fundamentally, we were still dropping, but you can see we pretty much gapped up this week. So that's a favorable sign for bullish momentum for the AUDs. This is the Australian index that we're looking at. Australian futures is also looking pretty bullish. So we're going to wait to see if we get a break of these highs here. Wait for the retest. We're not trading these. Obviously, we're just using it for a fundamental analysis. So the 10-year yields for Australia, the yields have been dropping. So that supports fundamental bearish Australian dollar. So that's why I'm not necessarily looking at trades in Australia right now. Okay, so the British index, as you can see, we've broken our trend line, cleared the highs. So this is a positive sign for bullish Great British Pound. Same thing for the futures. That's a great sign for the Great British Pounds. The yields have been decreasing, but we're still in our range. So possibly from these lows, we could see a reaction higher, but we would have to see if these highs get cleared. But that doesn't mean that this isn't a good entry, quote unquote, to look for higher pricing. Okay, so excuse me, excuse me. Oof. All right, so the New Zealand index, as you can see, we had this push down, but we immediately gapped up above the open of the week of March the 6th. And so that's a very positive sign for the New Zealand index. So NZD, New Zealand dollar, fundamentally was showing signs of weakness, but it's looking very strong now. Let's see what the other. Okay, so even the futures market has cleared the high, so that's a favorable sign for the New Zealand dollar. And then we gapped down on the yields, so that's not necessarily a good sign, but this could be like a doji or something before we push up. We won't know for sure until we get two strong candles closing bearish. So something like this would let us know like, okay, well, we are actually weak right now. Then you can see we have that nice reaction that cleared the highs. So this is essentially a pullback for bullish continuation based on the market structure. All right, let me see if there's any questions before we get ready for that news. All right, so just give me 1 second. Okay. Good morning, Jay Zimmer. Sorry, I'm just seeing it right now. Thank you for tuning in. Shout out to you for being in attendance. Hopefully, you're getting some value. If you have any questions, definitely DM me on TradingView because I'm always available. So just let me know if you have any questions. All right, so let's go back to the charts. Since GBPs were nice and strong, let's go down to the daily chart. And let's see what GBPs are talking about with this news. So we got 2 minutes Before the news hits, let me just go ahead and double check what news that was. So we got industrial production news. Forecast is 3%. So we'll see what the actual is. Oh yeah, that's right. Jordan just reminded me. Happy St. Patrick's Day, everybody. Unfortunately, I'm not wearing any green for y'all today. Green's one of my favorite colors, actually, but just not today. All right, so looking at the news, so the actual for the industrial production month over month came out to be 0.0%, which is negative for the US dollar. So that's supporting a bearish bias. Well, I think that's what that means. Yeah, it was just released actual 0.0. And then let me refresh the page. All right, so it seems like I guess the release for the U.S. industrial production year over year hasn't. The forecast hasn't is still 3%, but the data has not been released yet. I'm wondering if we're gonna actually get that today as well. So yeah, that's coming from the Federal Reserve, that news data. So for now, we just know that we got the month over month. Actual was 0.0, forecast was 0.2, previous was 0.3. So obviously that's a bearish reading for the US dollar. I don't see any major movements in the market, but everything is going according to our bias. GBP Swiss franc looks like it has a better setup right now. NZD USD looks like it's getting ready to clear some highs. Swiss franc looks like it's breaking out of our trend line, possibly. So yeah, everything is looking like it wants to go with my fundamental bias, but we never know. This could possibly turn around and go lower. Let's see what else. This could possibly turn around from here or go up to here, turn around. So we're just going to be vigilant and see what areas price is reacting from. But like I said, we're coming to the market week to week. That's where we do our higher time frame analysis from. The entries are going to be taken off the weekly time frame. So if you would like to learn more about these trading ideas that I have, please reach out to me on TradingView, and I would get you some information about that. So I think I'm going to end the call here. I know I started a little early, but I do have something to take care of a little later on, so I don't want to be late for that. Thank you guys for tuning in. This week's analysis on St. Patty's Day has been fun. I'm not going to go through the crypto indices metals for now. I just want to focus on the currency market just because fundamentally the news is a little all over the place, but just know that essentially I would be trading with the risk on sentiment where I'm buying the market and shorting the US dollar. So tune in next week. We'll be back again, hopefully with more oatmeal and more ideas. Hope you have a great weekend and see you next week.